Recurring theme from retailers that have reported thus far. Some have raised prices because of it, including e.l.f. last week. The National Retail Federation warning last week that the direct result of tariffs will be higher prices and fewer capital expenditures. But my next guest is staying positive into earnings. Joining me now is Chris Horvers, retail analyst at JPMorgan. Chris, it's great to have you on the show. And let's start right there. What is sparking the positivity?
Well, it's a little bit of what Steve talked about. So far, the price increases that have come through on the general merchandise side of the house, they've been met with very low elasticity because there's just not that much. So general merchandise starting to see, call it low single-digit inflation. It's been deflationary. We think that's going to look like mid-single-digit by the time you get through back to school. Given ongoing strong wage growth, the consumer's been able to absorb it. But I would caution that we can't extrapolate July too much because if you recall, not only are we getting the inflation, last year we had the assassination on President Trump, the consumer pause, you had a hurricane, you had the CrowdStrike issue. And so the strength of July, especially thinking about accelerating inflation to the back half, I think we just need to be really cautious, and that's how we're trying to position it around our stocks.
Accelerated inflation to the back half, where would you expect to see it first?
What we've seen so far, the category that has taken the most price inflation is actually in the home furnishings category. As you would expect, a lot of what's sourced from Asia is in that home furnishings category. And it's been passed through so far. You've also seen it in the computing and appliances. Best Buy took prices in mid-May. The Williams-Sonomas of the world, which own Pottery Barn or a Wayfair or an RH, they took prices, call it mid-single-digit plus. So far, a lot of it's coming through. Now you're seeing more of the athletic category. You're going to see more of apparel and footwear as you get into back to school. Most of the discretionary product that we buy in the United States is not sourced in this country. So your big high holidays, back to school and Christmas, that's when you tend to see why that inflation is going to see a couple step ups as we get into that August, September, and October timeframe.
One company that doesn't seem to be taking the price increases and was very vocal about it was Home Depot. I spoke with their CFO, I guess about 2 months ago, and they see it as an opportunity to take market share here because they have a more diversified supply chain. I know you like Home Depot. What else do you like?
So we really like, in that defensive bucket, we really like Walmart and Costco here. We think Walmart is $115, $118 stock by the end of this year. Our price target for the end of next year is $130, and the stock's at about $104 today. If you look at a Costco takes share in every environment, when the consumer's good and when the consumer's bad. They recently added hours to their store for executive members. You're already seeing that accelerate the top line, and many members just aren't aware of it. And so you have two share gainers as you look into the back half. We also like AutoZone on the defensive side. And then in our more discretionary world, we like Ulta Cosmetics here. The category is getting better. You've heard that from the likes of Estee Lauder. They're starting to take market share after losing market share to the likes of Amazon and Sephora, Kohl's last year. So accelerating category, a retailer that's going to start to gain market share is the recipe for not only earnings revisions, but multiple expansion.